We're joined today by Brian Splitt with agmarket.net. Brian, giving us a little bit of reaction here to this October WASDE report from USDA. Brian, first blush of this thing, what's your takeaway? What is the kind of the headline for you?
So I think the largest move in the market we saw, again, similar to the quarterly stock report, was the soybeans. We did have the yield go up nearly a bushel per acre, and the expectation was for yield to go higher, so that was not a surprise. But we're now at 51.5 bushels per acre, and actually that was agmarket.net's pre-report estimate. So yield is right kind of where we thought it would come in. Now, as we move forward, we think that number could continue to go higher. But 320 million bushels is not as bearish as what we thought maybe the worst case scenario could have been. We were thinking maybe the carryout would go up near 370 million bushels, and it might over time, but I think this report could have been worse for soybeans than it was. You look at the world stocks came in bigger than the September WASDE report, so that's adding to a little bit of the pressure here. And then you look at the corn and the wheat market. Corn world stocks bigger than expected, wheat world stocks less than expected. Net between the two, feed grain stocks actually about unchanged month to month. And so I think you're going to continue to see wheat become the leader versus corn, and it needs to continue to make sure it's priced out of feed rations.
Yeah, well, and I think that is something that we're seeing right now. We're seeing a little bit of strength in the price on wheat. We're seeing a little bit of pressure on soybeans and corn here. Talk a little bit about the export picture, because there were some adjustments specifically for corn and soybeans as well. What's your take on where we sit with that?
Well, I think for corn, do we really have the reason to think exports should be adjusted higher right now? It wasn't something that was on my mind. So that'll be something that we'll be looking for down the road, whether or not we have the pace that warrants that. I think the bigger concern is going to be the soybeans. When you look at the export pace that we have right now, that would suggest that the USDA is too high. Some are saying as much as 200 million bushels too high. Now, we know that can change at a drop of a hat if China comes in and decides to start a major buying program, but they've been rather absent for a while. We just don't see those 8 a.m. sales on the wires like we were a year ago when they were in here just buying ferociously. So that's going to continue to be a concern as we move closer to the South American crop. So it looks like right now, unless we see a concern about Brazil's soybean crop, and that might be the impetus needed for China to come in and start buying U.S. soybeans aggressively, they may just kind of bide their time and wait for this new crop out of Brazil. And again, a lot of the estimates right now are mid 140 million ton type of a number. And if we do have good weather, that's a trend type of a yield. So if we have good weather, that could go north up near 150 million tons. And that's not going to be good news in the big picture for soybeans.
Obviously, we're in the heart of harvest season here. A lot of focus now on getting the crop out of the field if they can. What does that look like as far as setting this up for any kind of decision making that we should be making this fall? How should we be thinking about this market as we move forward?
Well, there's a lot of conversations right now looking at basis levels. We've also, over the last couple of months, had quite a bit of carry that they've put in the soybean market. So where maybe several months ago it did not make sense to put beans in the bin, at least right now there is the potential to put them in the bin and able to capture carry. I think November to March was offering around 22 cents of carry prior to the report. So if you're hedged, what we've been recommending, if you're not going to sell the beans out of the field, is to take advantage of the carry and roll those hedges out. I think November to July is close to 40 cents. And really back in 2018, when we were in the midst of the trade war, those spreads were going out to about 50 max. So, that is some opportunity if you do want to carry beans for a little while. But also remember, if you decide to do that to take advantage of the carry, you're opening yourself up to some rather large changes in basis. And I would suspect that if Brazil does have a large crop, the basis levels that are being offered right now will not be there come next spring.
So yeah, pretty dynamic situation as we go through this fall here into next year. Obviously, continuing to watch weather and whether or not really, Brian, if the this is the old saying, big crops get bigger. Do you still think that there's an opportunity here for the U.S. crop to get bigger?
We do. We think that the bean yield will likely at some point get to a point where the USDA acknowledges that it is a record. So with the current yield sitting about a half a bushel per acre under record yields, we do think that there's potential for us to see that record matched or exceeded over the next several months. Time will tell as we get more yield reports. And as we look at the corn crop, I think pre-report the trade was thinking that maybe we would see a small revision lower in yield. Our own thoughts here were that whatever the change in yield was, it wasn't going to be that material. And the USDA ended up raising it, 0.2 bushels per acre. So I don't think it's that big of a major change. But again, it is a large crop. Does it have the potential to get a little bit bigger? I think what we're thinking is the crop in Iowa is going to get a little bigger over time, and the crop in Illinois might retract a little bit. But net, I think we're pretty close to where the corn crop is going to end up by the January final production numbers.
All right. Well, we'll continue to watch it. Sure appreciate you giving us some insights today. Brian Splitt with agmarket.net, our guest. We'll be back. Continue to follow along as we continue our coverage here on agweb.com.